Well, happy Monday to you. So glad to have you with us here as we get ready to open up a new trading week. I'm Marlon Bowling, your tour guide to the ag commodities. Thanks so much for joining us. And as we look at our overnight trade, I want to welcome aboard Brian Hoops, president of Midwest Market Solutions. He's based in Springfield, Missouri. Well, Brian, I know we had quite a few showers that went through parts of the Corn Belt and the plains here over the past week or week and a half or so. But overall, how do you think we may have a good peg for the harvest progress when we get the new numbers from USDA later on this afternoon here?
You're right about the showers. It slowed down harvest in some areas down here in the winter wheat plains. It really helped the winter wheat crop out. It's going to be off to a really good start as those showers are going to be viewed as very beneficial in helping that crop to emerge. So, last week we were just a little over half done or close to it. This week we're going to be close to 2/3, in that 60-65% range. And then by next week, we should be about 3/4 done. So, the market here, I think, is trying to time when this harvest low is going to occur, and it probably already has or is in the process of forming. You may see a little bit of selling pressure coming from producers who have been bidding a lot of their product at the start of their harvest, putting corn, soybeans into storage, and then any overrun will get taken to elevators and sold. And these elevators, these end users, I think they badly need the product. It's hard to come by. We've seen basis levels improve a lot, just trying to pry some product loose. And of course, we'll get into the end of the month. We'll start talking about the deliveries against the November futures for soybeans. And that's another way that the commercials can get a hold of some product. But coming up this week, there's not a lot of reports coming out other than the reports you mentioned today. We'll also have option expiration for the November grain options this week, and sometimes that can produce a little bit of volatility.
Well, that if the basis is firming up in the middle of harvest activity, that would seem to indicate that all the grain that hasn't been sold is going home, that there must be room for it in home storage.
Yeah, that's one thing the producer has done a really good job of the last 5-10 years is increase their on-farm storage capabilities, and that's a real benefit to you. You can pay for that with basis improvement almost every year, just real quickly, and that's one thing that we've seen a big improvement. As I mentioned, a lot of on-farm storage that puts us, as far as going into the harvest time frame. These end users, need the crop. They haven't had a lot of crop being moved, and with ethanol production increasing, that increases your demand for corn. And if we could see some export business increase as well, I think you'd see the market, continue to move higher, especially as we go through these fall and the winter months.
Let's look at the overnight trade in the corn market with our quotes provided by bar chart here. Everything was softer overnight. We had December corn down 2 1/4 at 523.5 per bushel. Soybeans, we had the November contract down 6 3/4 at 12.11 per bushel. Moving on to our wheat, on these quotes provided by bar chart, we had December Chicago down 3 1/4 at 730 3/4. In Kansas City wheat for the hard red winter varieties or hard red class, you had December down 1/2 at 743 1/4. In the spring wheat trade in Minneapolis, December was down 2 cents. It had a last trade of 966 3/4, so that would have been within a penny of its low of the overnight trade. And in the cotton market overnight, December was 63 points higher at 107.96 cents per pound. So there it goes again, hanging in there with some good strength overnight. We'll come back in a moment and we'll talk more with Brian Hoops. We'll talk about livestock and the setup for trade on a Monday when we come back. Let's go back to our talk with Brian Hoops of Midwest Market Solutions. Well, let's talk about livestock, and let's take a look also at where we finished last week. This will be a guidepost for where we start today. On the live cattle market, you had the December contract finishing last week at 130.97, and that would have been up 67 cents. And we had February gaining 70 cents on the day. It finished the week at 135.35 per hundredweight. On the feeder cattle market last week, we had the November contract going down 72 cents on Friday. It finished at 161.42. January down 82 at 161.52. And on the lean hog market, well, here you had December 95 cents higher at 78.27, but all the other months from February on out were all over $1 higher on Friday. So a lot of strength in that lean hog market last Friday. Brian, let's talk about this as far as what may be weighing on the cattle market or helping it here today. And why did the hogs get such a boost on Friday? What's going on?
Yeah, a lot of technical buying coming into that hog market. We kind of consolidated on Thursday and saw some buying interest come in on Friday to push that market higher. We had been, down for most of the week in the hog market. A lot of selling, a couple gaps lower, and we finally found a point where we stabilized the market. No new selling came in, and then it allowed us some short covering to kind of clean up the trade for the end of the week. Cattle this week, we did see 25 deliveries against the October live cattle contract on Thursday night. As you see, that contract's trading almost 126 now. That is going to attract some deliveries because cash is in that 124 level. So we may see more deliveries tonight, depending on what the futures do today. Some of the deferred contracts did post some new highs for the move, kind of a breakout on a technical basis. But we have a cattle on feed report coming out Friday afternoon. And what I'm seeing in the early numbers, placements are going to be up compared to last year. And that'll probably limit the advance for April, for June, as we're going to see 3 to 4% more cattle being placed over a year ago levels.
When you look at the chart for the lean hogs, what do you see? What is it telling you right now as far as the pattern here? Because we have really sold off from a recent high.
Yeah, we have. It's been a really choppy type marketplace, and you look at how the market acts. It seems on a gap either higher or lower, and then take its cues. If it's able to run stops, if it's moving lower and takes out the previous day's lows, we're going to run some stops. And same thing on the upside. A lot of stops being ran above the market. So if you're in this hog market, it's going to be very volatile, very choppy type of trading affair. But the last week and a half, the bias has been to the downside. We digested that quarterly hog and pig report, which was pretty friendly, but ever since then, relentless selling has come back into the market.
Just wanted to point out also the Dow Jones Industrial Average was a little weaker overnight, down 154 points on the December futures. And of course, all eyes on the crude oil trade, where we had November West Texas crude 98 cents higher, almost $1 higher at 83.26 per barrel. There it goes. Brian, thanks for the time. Brian Hoops of Midwest Market Solutions. We're about ready to get underway here, Tammy.